and at the physical layer, embodied AI, Tesla being a great example. Now, just one more word on NVIDIA, since I know many people own it, and I want to clarify. We don't think it's going to be destroyed. Many people are saying, oh, this is what happened in the internet. Napster started the movement and it went bankrupt. And other companies started the movement and went bankrupt. That is not what we're talking about here. We actually think that DeepSeek is going to accelerate the momentum in artificial intelligence. Now, the reason we're not surprised when we started moving away from the hardware sector, not completely, we think these stocks are going to do well over the long term. They might be a little volatile in the near term. But the reason we did is we saw the costs declining. The costs associated with artificial intelligence are declining on the training side by 75% per year, and on the inference side by 80 to 95% per year. So DeepSeek at $6 million is ahead of the curve on a high-end workstation. A high-end workstation takes very few GPUs compared to a data center, right? This is AI, and some of you may have heard of this movement, AI moving to the edge. And at some point it will be on our phones. Those large language models will be on our phones. This is the first step. That is very exciting, and it is really going to turbocharge the AI movement. So we have dedicated, as I mentioned, AI platforms. Tesla will go into more of that as I continue on. AI is not only changing at the hardware level here, it is changing at the software level. So the most provocative example of AI at work these days is what's happening in coding. This is a benchmark we're trying to measure these large language models against. And it's a benchmark which basically says that let's see how far into this coding project this large language model can get before human intervention. And not much more than a year ago, it wasn't very far. At one point, I think last year, it was 2%. By the end of the year, roughly 13%. Now, as of the end of the year, 74%. This is going to 100%. And beyond. We do believe that that large language models, AI, is going to become better at coding than human beings. I know in the beginning of our research on AI, we were thinking of this concept of, wait a minute, technology being better than human beings? Not possible. Well, of course it's possible. Calculators are better than human beings at calculating, so this is not new. The other thing to note on this chart, and again, this is how in active equity management we think about things. How do we evolve the portfolio? You can see this is the three stacks here are really layers of the tech stack, the three bars here, layers of the tech stack. And you can see the infrastructure layer, platform layer, application layer. All of them have been growing quite nicely, 2019 to 2024, mid to high teens or low 20s. The fastest already is platform as a service. We believe in the next 5 to 6 years, all of them will accelerate. This is why NVIDIA is going to be okay. Maybe it needs a little time to digest, but the AI movement is accelerating. Here again, on the bottom of this chart, you can see where we see the share shifts taking place. Infrastructure layer, despite what DeepSeek has just announced, we think that it's going to maintain its share over time. The share gains are going to be in platform as a service. Palantir is poster child for that these days. And GitLab in the software space is an up-and-comer. And the losses are going to be in the application space. Why is that? Well, we are making engineers so much more productive. What that means is they are going to have more time, company by company, to customize their coding for their companies. So right now, companies use software as a service to help them with productivity. And it's been very good. But software as a service is one size fits most. What if engineers can truly customize company by company now? We think that's going to happen. So that will take from the software as a service layer. The value is moving down the stack. That doesn't mean that companies like Salesforce.com and ServiceNow are going to disappear, but just listening to ServiceNow's earnings call last night, I think the gloves are off between the two of them. And that's not a great sign if a part of the stack is really going to be accelerating moving forward. A little bit on this convergence idea from the angle of robots. And you can see again, neural networks and robots converging. Before I go into the specific robot example, autonomous mobility, whether it's vehicles or trucks or drones, all of those are about the convergence of robotics, energy storage, and artificial intelligence. Now, robotics, on that very first convergence slide, you see it's it was a very small dot. Hasn't made a big impact yet. In fact, in all of the world, the number of industrial robots is fewer than 1 million. Why? Until recently, when we could put sensors on them, they had to be put in cages because they're dangerous. That is going to change. So, now on to the robot example here. This again is a bit dated. All these numbers would be better today because AI is moving so quickly. But there was a development in AI architecture called the transformer architecture, which took place in 2017. It is just now being applied to robotics. And now that we are moving towards adaptive robotics with sensors, safe, and all of that. You can see the pre and post transformer impact on robots. So, showing a robot, again powered by large language models, a task. And asking it to do that task. Before transformer technology, pretty good, 72% was able to do it. After transformer architecture, almost perfect. The more provocative example is completely new tasks, never seen before, and asking a robot to complete the task. You can see pre-transformer, 19%, post-transformer, 76%, and it's getting much better. So 4 times better pre-post, and it's even better now. So we think that one of the earliest stage innovation platforms is robotics. It is submitted to 50% cost declines for every cumulative doubling in the number of units produced. And so as costs decline that much, with the help AI as well, with the cost dropping as much as I described earlier. We're going to see robots proliferating from fewer than 1 million to billions. And many people, Elon Musk thinks the number is going to be much higher than the number of human beings on Earth. Here is an application of AI that we consider the most profound. So I've just described robotics and autonomous mobility. I'll just give you a sense of the size of that market and how quickly it's going to evolve. It is essentially nothing now. We believe, especially after last night when Tesla announced that it is going to launch its first commercial FSD, full self-driving vehicle, and is going to scale. Tesla and others are going after the platform opportunity, another platform opportunity. We believe that will be a $4 to $5 trillion opportunity in the next 5 to 10 years. That is what Tesla and in China, Baidu with Apollo are going after. And we're trying to figure out if this is going to submit to natural geographic monopolies. Will it be BMW and Mercedes in Germany or in Europe? We don't know. They haven't shown us enough advancement yet. Maybe it is. Maybe they're not going to show us until they're ready to launch. But here is, if that's the biggest revenue generator, thanks to AI, during the next 5 to 10 years. This one is the most profound. It is the convergence of sequencing technologies. So I was astonished to learn that we have roughly 37 trillion cells in our body. And now sequencing technologies are down to the single cell layer to try and identify what is going wrong with an individual's genome. So pretty provocative, especially because AI is a big data opportunity. This is the biggest data opportunity out there. But thanks to AI, the R&D costs are collapsing in healthcare to create a new drug, down 50%, and we're seeing evidence of even faster. The number of failures as companies start to pursue a new drug, they're dropping at 50%, so the odds of success are up twofold, thanks to artificial intelligence. We believe the convergence of sequencing technologies, artificial intelligence, and gene therapy technologies like CRISPR-Cas9, gene editing. We believe that they are going to create cures. Now, cures are already here. Sickle cell disease, beta thalassemia, that's CRISPR Therapeutics, a European company, has developed those cures, and they are beginning to scale. We could see cures to not only to rare diseases, but also for diseases like type 1 diabetes, which is what they're working on now. So ultimately cancer. So again, one of the most profound applications of AI. I'm going to go through this very quickly. We believe that there are inefficiencies in the market in terms of capturing innovation in portfolios. Time horizons are too short. We have a 5-year investment time horizon, and you need that as waves of innovation take place. The second is many investors and advisors and allocators are very focused on benchmarks. Some of what I've just discussed to you will not get into benchmarks for a very long time. Tesla did not get into the S&P 500 until it hit $500 billion in market cap. Today, we've got a lot of names in the innovation space that are in the $1 billion, $5 billion category, and we believe they could scale as much as Tesla has, but they won't get into benchmarks for years. Now, we've been facing an issue, a big headwind. Actually, we've faced 3 big headwinds. I'll get back to that in a minute. But Mag 6 has taken all the oxygen out of the room. Mag 6 created the biggest concentration we have ever seen, worse than during the Great Depression in the 20s, when output and prices were falling 30%. And bankruptcies were all over the place. We had worse concentration in this last year than we did back in the Depression. We think that's about to change, and I'll get back to that in a moment as to why. It is already starting to change. You can see second quarter, that was a Mag 6 quarter. The rest of the stocks in the index in S&P went down 0.4%. You can see that the third quarter was all about other stocks. The market started to broaden out. After periods of concentration like we've just seen, one of 2 things happens: bear market or a bull market. Bear market, tech and telecom bust. We were not in a bubble. We have just started this revolution. Or a time is ticking here. Or a broadening out bull market. We believe that's what we're in right now. And you can see it. You can see it from the top performers in our portfolios. The AI and Robotics Fund on the top, and the ARK Innovation Fund in the middle, breaking away from the pack. We truly believe this is the beginning. We think interest rates, which have been a massive headwind, that shocking increase, 24-fold increase in the Fed funds rate in little more than a year's time, that was a huge headwind for long-duration strategies. But our strategies do not always go down when interest rates go up. Interest rates went up in 2017-18, and our strategies were some of the best in the market, both in an up year in 17 and a down year in 2018. So that headwind is gone. We think concentration is ending. The bull market's broadening out. That should be to our benefit. And valuation is maybe the most important chart in here. You can see what has happened to the market, the gray line there on the left-hand chart. Market multiple using adjusted enterprise value to EBITDA has gone up from below 10 to nearly 14. ARC's multiple went through a crazy period, which was anomalous, associated with a supply shock, and that is over. On the right-hand side, you can see what our premium to the S&P is now. And we almost hit a market multiple during the yen carry trade unwind last year. Valuation, the last headwind we faced, is now, we believe, a tailwind. And then, again, I'll just talk a little bit more about why we think that real growth, which is associated with innovation, is not going to drive inflation. That's the fear. That's not what happened in the 80s and 90s. And we are back in a revolution like the 80s and 90s, which was amazing for growth stocks, amazing for innovation. And I think in terms of the policy dynamics in the US, the biggest scourge on innovation was regulation. That benefits the big guys. They have all the lobbying power. Now, deregulation will help us. So thank you very much.